Greetings. Once again, it's Dwayne, CFRN. Now, we've done a series of 10 consecutive trading days and the concierge trade alerts. I don't know how many of them you've had an opportunity to watch. I've tried to keep them short so that it would enable you to watch the entire video. Our daily radio program, if you've ever listened to the intro, it's the program of indeterminate length, which means while we have a 2-hour time slot allotted for that, I have the luxury of those who are logged in as part of the audience, either on YouTube or through our GoToMeeting interface to the radio station. I can continue my conversation with them beyond the 2-hour period. Today's show ran, I think, almost 3.5. The reason being, we had some great questions, but we had two guests today. We had John. We also had Wayne Jett, who's the author of the book, The Fruits of Graft, Great Depressions Then and Now. It is deep reading. He poured 5 years of his life into writing that book, over 500 pages. It's not a bunch of conspiracy theories. He did the research. He was an attorney before he retired. He practiced before, I think it was the Ninth Circuit Court. And he, although I think he sometimes falls prey to some of the conspiracy theories, he has done so much investigation and learned so much that he's not as quick to just put something down as a conspiracy theory. I mean, until he's fully researched it, he allows for the possibility. He has seen the seamy, slimy underbelly of that which we call the U.S. government. And hey, when I say that, there's no one prouder to be an American than I. Talked about this, or I wrote about it the other night, and I talked about it on the show. When I was born to, and my wife corrected me, she said, you weren't born to a poor working class family in a small town in Georgia. You were born to a middle class working family in Georgia. And I said, I guess you're right. I stand corrected. Nonetheless, I hit the birth lottery because I was born in a small town in Georgia. Actually, I was born in the back of an ambulance going from the small town we lived in to the big city down the road, 35 miles away, Augusta, Georgia, because there were some complications with the birth, and so I don't know if I was born in McDuffie County or Richmond County. I think my birth certificate says Richmond County. But nonetheless, I'm back tonight to do another video, and not so much a recap video, but a video to just talk to you for a few minutes about this right here. What is your goal? Okay. Now, when you first got into trading, and for different people, obviously that's going to be different amounts of time, what was the reason? What originally attracted you to the business of trading? I mean, there's all kinds of things out there that you can be. You could be a carpenter, or you could be a plumber, you could be a roofer, you could be a programmer, you could be an auto mechanic, you could be a rocket scientist, you could be an astronaut. But there's something about trading that really attracted you. Now, I don't mean to rain on anyone's parade or pop the piñata before it's time. But if the reason you were attracted to the business of trading was because you wandered across a website or got an email or went to a seminar that said the business of trading and easy money all in the same sentence, then I'm just here to tell you, you got in for the wrong reason. Okay? Now, trading is not as complicated as some would make it out to be. What do I mean by that? Well, the more complicated it appears or is made to appear, the more stuff I can sell you to help you unravel this knot called trading. Now, you'll never hear me say that trading is easy, because it's not. There are so many variables, we don't have time to go into them all. Trading's not easy, but it can be simple. That's our company logo, motto. If we had t-shirts, we would put that on the front or the back, wherever it fits. Trading's not easy, but it can be simple. Now, Michael and I have spent the last few years since 2000's CFRN began in 2005. I met Michael in 2006. And since then, he and I have been training other traders how to trade. We've gone through a couple of iterations, but over the last 4.5, almost 5 years, nothing has changed in our live training room. Same indicators, same strategy, same time frame. Nothing has changed. And we have a spreadsheet that we make available to everyone who comes into our live training room. You can request a copy of the spreadsheet. You got to read all the required CFT disclosures and our own CFRN disclaimers so that you fully understand what it is you're looking at. But we have faithfully recorded every trade taken in the live training room since, well, again, between 4.5 and 5 years. And we would have done it before then, just never really crossed our mind. Because the way our live training room works is you actually show up 5 trading days in a row for 2 hours from 9:30 to 11:30 a.m. and you actually watch us at work. And Michael does his very best to explain everything he's doing. Everything we do has a reason, and our methodology is this simple. Now, you won't know what some of these words mean because we haven't taught you yet, but every trade begins with a cross, bullish or bearish. If it's a bullish cross, we're looking for a long trade. If it's a bearish cross, we're looking for a short trade. So we'll just talk about the bullish side, and then for the bearish side, you just flip it upside down. Bullish cross, price pulls away from the BBC. Price pulls back to physically touch the BBC. The next candle closes green. We buy the open of the next candle plus 1 tick. At 4 ticks profit, we move our stop to break even. We are very aggressive with our risk management. New students are given a daily goal of $100 per contract per day. If you're trading the S&P 500 E-mini, that's 8 ticks. If you're trading gold or crude, that's 10 ticks. New students are put through a training period before they go live with real money. In the training period, you are required, of course, we're not at your house looking over your shoulder, so there is a large amount of the honor system involved here. But once you understand our strategy and our indicators, how everything works, in the simulator where you have no real money at risk, we want you to put together 10 consecutive days in a row where you make $100 in 10 trades or less. And then we want you to have the discipline to put the mouse away. That's very, very important. And we'll get into that more and more as you make a decision to become a CFRN partner. Now, a CFRN partner means being a part of the live training room. You own the indicator set for life. During the 90 days, you come to class every day, Monday through Friday, for 2 hours. You come to the Partners Workshop every Thursday night at 9 p.m. Eastern. And you have unlimited access to one-on-one mentoring for the entire 90 days. You also receive our weekly trading zones every Monday morning at 6:15 a.m. Eastern. That's before Wall Street wakes up. Our partners have the numbers, get their charts ready, and because we're trading futures, we literally trade around the clock. Now the Globex session opens on Sunday night. And let me just show you a little something that's happened this week, which is kind of unique in crude oil. We're currently trading the M contract, which is June. This was the Sunday night open, April 23rd at 1800 hours, 6 p.m. Eastern. This was the last Friday's close, and this was last Sunday's open. So a lot of people from the world of stocks, equities, to them the opening of the markets is Monday morning at 9:30 a.m. Eastern, but for us the opening of the markets is 6 p.m. Eastern Sunday night. You're not required to trade on Sunday night. You're more than welcome to wait until Monday. The markets from Sunday night at 6, they trade right up until Friday afternoon at 5, and each day they take an hour break from 5 p.m. to 6 p.m. I'm making this video on a Wednesday, so tonight at 6 p.m. Eastern, when the markets reopen, that will be the beginning of the Thursday session. Now, what you don't want to do is you don't want to keep an order open from the Wednesday session to the Thursday session. If you do, you will be subjected to the full margin. For example, on the S&P, we trade the S&P for $500 per contract. We control $100,000 of S&P stock for $500. However, if you hold a contract open, if you hold an order open from 5 p.m. to 6 p.m., you are then subjected to what they call full margin, which is $5,000. And if you can't support that with the money in your account, your position is liquidated and you're made to sit in the penalty box the following trading day. Even though you still have money in your account, they set you in the penalty box to teach you a lesson because you had a margin call. Okay? But anyway, I flipped over to the crude chart to show you these are this week's weekly trading zones. Okay? So on Sunday night, we opened down here and we ran right up into a weekly zone at 49.90/49.95. When price hits a weekly trading zone, one of three things will always happen. There will be consolidation. The second most likely is rejection. And the third most likely is what I call a hot knife through butter. The consolidation is pretty easy to figure out. Rejection looks a little something like this. It's like you touched a hot stove and ran the other direction. And a hot knife through butter, I don't have an example right here, but that's when the candle slices right through the zone as if it weren't even there. Usually when that happens, price will return to that zone, consolidate, and then continue in the direction that it sliced through. That becomes a trade in and of itself. So once you put the zones for the week on your chart, we have some partners who just simply trade zone to zone. From 49.40 down to 49.90 down to 49.15, that's 75 ticks at $10 a tick. So that's a $750 per contract move. Okay? But what's interesting about this week is oil has been very quiet. We went through some periods of incredible volatility in crude, but this week, not so much. We went down to the zone on the 24th, and then we consolidated just above the zone. We made a run up. We came back. We continued to consolidate at this zone. We made a run for the zone overhead. Buyers gave up before they got there. Sellers took over, drove it down, and we got within a few ticks of the zone. Buyers stepped in, pushed it back up, and then there was a glitch in the data coming out of the CME today on crude. Wasn't the broker's fault. It was an exchange-related incident. So there's about 5 hours missing from here. But the important thing is, when they got the glitch covered, you see this is, if you look at the red, follow my cursor all the way to the bottom where it's red. This candle is 6 a.m. Eastern. This candle is 11 a.m. Eastern. So there was a lot of back and forth in between here. But the bottom line is we went to the zone overhead, 90.95, reversed, and came right back down to the zone at 49.10/15. Now tonight's Wednesday night, so we still have 2 more days of trading. It's just unusual to see 3.5 days, Sunday night, Monday, Tuesday, and Wednesday, all contained inside of just one zone. So this lack of volatility, this consolidation in crude, tells us that volatility is coming. We don't know if it will hit tonight or tomorrow or next week, but trust me, it's coming. Okay, so be prepared. Now back to the S&P and the question I asked, what is your goal? Do you want to make money? Do you want to make a lot of money? Do you want to have the freedom to make your own hours? Do you want the freedom to travel? Do you want to have no inventory and no employees? Different people are attracted to trading for different reasons. But once they make a commitment to really learning how to trade, they often quickly lose sight of what their original vision was. They know that if they learn to trade and take 2 points a day out of the S&P, that's worth $100 per contract. By the time they get up to 10 contracts, with proper training and education, that's $1,000 a day before commissions. By the time they work their way up to 20 contracts, remember it only costs $500 per contract to trade it, you're looking at $2,000 a day before commissions. But again, in that struggle to just take 2 points out of the S&P on a daily basis, traders lose sight of their original goal. That 2 points a day becomes like some insurmountable impossibility. And it has to do not with the markets, because there's always plenty of opportunity to take profit out of the market. It's what goes on between our ears that gets in our way. That's what clouds our vision. Now, we have also what are called concierge trade alerts. That's a separate product. It doesn't really have anything to do with our live training room, although if you become a concierge client, you are allowed to attend the live training room if you so desire. But we had a trade today, buy 23.88. It ran up 6 3/4 points at $50 per point. Now, if you hang around here very long, you'll hear me say more times than you care that important prices, important areas are almost always tested. Price gets back below the trigger, and it gives us a second trade that runs 6.5 points. It then gets back below the trigger and runs 4 points. So somebody that was looking for their 2 points a day, this is one way of doing it. Now, this is called discretionary trading. What we teach in the live training room is strictly rules-based trading. You don't take 6 3/4 points out of the market. You don't take 6.5. You make your 2 points a day, put the mouse away. You work off what's called our 24/20 blueprint. And after you put together your 10 consecutive days in a row in Sim, you then go live with one contract. Once you've increased your account balance by $2,000, that's when you add your second contract. So you double your pay. You're now at $200 a day before commissions. The same 2 points that made you $100 now make you $200. You don't have to do extra work, get extra points. By simply adding a contract, you double your pay. Now, after that, we go on a calendar-based method, and you'll know exactly what date you're going to add your third contract, and your fourth, and your fifth, and so on. Unless you run into a rough patch. Sometimes life happens, sometimes people get sick, or you just hit a rough patch in the market. And so when that happens, we don't allow you to bleed out on the trading floor. We grab you by the pants leg and we drag you back into the simulator. We troubleshoot, we look at the trades you've taken, we go over them with you, we critique them with you, we make sure that you understand what went wrong. Now, it's possible that you did absolutely nothing wrong, you simply hit a rough patch, okay? That's possible. However, once you know that that's all it was, or if we find out what the problem was, if there was a problem, then what's going to happen is you and I will spend some time in a personal mentoring session, 1 or 2 sessions. You'll spend a couple of days in Sim regaining your confidence, and then you'll step back out into the live market. And if you were already had worked your way up one by one to 5 contracts, you'll step back out at 5. You don't start over again at 1. Okay? You go right back to where you left off. This gives you incredible peace of mind, knowing that whenever you do hit a rough patch, there's always somebody there to talk to turn to help you evaluate what's going on, and to help you get your feet back on the right path. Okay? So I want you to think back. What was your original reason that you became a trader? Was it money? Was it freedom? Could have been any number of things. And what are your thoughts today? Is it simply a struggle to survive? Is it just trying to even get the 2 points? Chances are it's changed. Hopefully you can remember the first love. You looked at a chart, you were drawn to it, and you said, I can do that. Now, President Trump made a comment the other day, which I thought was a great show of humility on his part. He's not known as a man for being incredibly humble, but he made the statement. He said, you know, this job is a lot harder than I thought it was going to be. Trading, when you first looked at it, it was like, well, even a caveman could do that. No offense to the caveman, but you soon found out that trading's not easy. And that's where we come in. We do our best to help you make it simple. There's so many indicators and so many oscillators and so much stuff out there. And there's always somebody ready to convince you that if you had just this one more thing, you'd be fine. Well, we don't use any of the typical stuff. The MACDs, the stochastics, the Bollinger Bands, the advanced decline lines. We have nothing against them. We're not saying that they're faulty or wrong in any way. They have their place. Many traders use them religiously and use them successfully. What we decided to do was to create our own little strategy, put together our own little indicator set that wasn't overwhelming, wasn't expensive, that could be easily explained and understood, and could even be color-coded to help it be simple. Okay? In our 90-day mentoring program, we start you at square one. We talk to you, we evaluate where you're at, how much experience you have, and then we start trading. And you've already been explained the strategy, the setup, you've been given a copy of the rules, and you follow along, watching, and every time we say or do something that you don't understand, you ask a question. That's how you learn, by asking questions. You ask a question, we answer it. You ask a question, we answer it. Then you sign up for mentoring sessions, as many and as often as you need during the 90-day period. At the end of the 90 days, we don't kick you to the curb. Remember, you own the indicator set for life. But at the end of the 90 days, if you want to remain an active partner, you can for a minimal monthly fee. Now, I'm sorry, but unlike the late night guy on TV who promises to teach you how to trade in 5 days for $7,000, we can't do that. We're just not that smart. And quite frankly, nobody can teach you how to trade in 5 days. I don't care. You know what? If they could teach you in 5 days, it would be worth $70,000. But it just can't be done. And the $10,000 fancy Fibonacci software, well, in the platform that you have, it came with fib tools, and I can teach you in a mentoring session how to use those tools and be just as accurate as the fancy $10,000 stuff at a fraction of the price. So I want you to think about your goal. I'd like you to sign up for our iTunes podcast. I don't upload every podcast to iTunes, and there's a reason for that. To put it on iTunes is really quite a lengthy process, and it's quite time consuming. So what I typically do is I put every day's podcast, whether I put it on iTunes or not, I put it on our Google Plus page. And I'm going to show you how to get to that, just in case you don't know. You simply type in emini.cfrn.net, hit enter, scroll down. Up here is where you can take the concierge trade alert trial. No automatic rollover. This explains the service. And here's today's radio show. All three, does it tell me down in the corner? Thought it used to. Yeah, almost 4 hours today. So we really ran over. Now, as you scroll down on this page, you'll find webinars, seminars, you'll find Q&A sessions, you'll find meetings of all kinds, you'll find standalone video recaps, you'll find more stuff than will fit in a Christmas stocking. Now, I'm going to be back with you here in just one moment. So just really everything that you need is on this page. If you keep scrolling down, it goes on and on for 2+ years. Just when you think you've reached the bottom, there's more. Charts, tips, tricks, you name it, it's all there. Okay. All right. Like I said, I don't really feel up to a traditional recap. If you want to see the full-blown recap from today, go to that page I just showed you. Watch the recording from today's show. Subscribe with or without the I. It's entirely up to you. Doesn't cost a thing, and it helps us. You can call us anytime or email us anytime for help. This is how you subscribe over here. Just go to this address, click subscribe, and it'll ask you, do you want to subscribe in iTunes or do you have some other podcatcher? It shows you all the different options. You can even bookmark it, and it serves the same purpose. I already talked to you about what happened in the S&P yesterday. There was 11 points available off of the 2378 email that we sent you. In the Dow, today the first move was good for 27 points. Second move was 40 points. The third move was 31 points. And then on the short side, we triggered towards the end of the day, and you'd be done trading at this point because the market's closed at 5. This candle opened at 5:30, so we're not even going to count that. Soybeans, 1 point, pays $50 a point like the S&P. This was a stop out if you took it, okay? If you've been through a personal mentoring session with me, you probably wouldn't have taken it, and I'll be happy to explain why. This move was good for 6 points, okay, at $50 per point. But there's a good chance you wouldn't have taken this one. You might have, but again, I'll be happy to explain that in a mentoring session. That's a daily gold chart, so that doesn't apply here. Here's crude. We already talked about crude, but before we were just talking about how it's been in one zone all week. Last night our email that we sent out said to buy 49.50, and when it hit its high there was $510 per contract available. Okay? And the sell side never got tagged. On the bonds, there was 4 points available at 31.25 per tick. That's $125 per contract. Bonds, you know, we have incredible $1,000 days in the bonds, but by and large, especially if you're just getting started out, trade something else, okay? And then this one, if your stop was deep enough, you had a profit of 6 times 31.25. If your stop wasn't deep enough, you got stopped out. Okay. Now we do 8 markets a day. Here's the NQ. The NQ, we were looking to sell 55.39. Got stopped out there. And on this one, you might as well just call that a stop out as well. See, whether it's good, bad, or ugly, we just tell you, because hiding stuff only leads to trouble. The buy side of gold was $12.68. There was $480 per contract available. I made a boo-boo, and I explained that on the blog today, or on the radio show. The sell side should have read 1262. If you took it, it only dropped to 1260.70. Is that right? Yeah, 1260.70. So that means there was $130 per contract available. You're better off if you didn't take it. So, and that's it. That's all 8 markets. I've covered them all that quick. It's pretty easy when you've already marked the charts up. Now, I wrote the other night about be careful of historical charts and historical videos, because you can get the wool pulled over your eyes pretty quick. Then I turned right around and said, however, I do a bunch of both. So I'm just being honest with you. Here's the difference. On the Concierge Trade Alerts, we send you the email the night before, okay? And so the next day, you're able to go and check and see what actually happened. And you're looking at your own chart to see what actually happened, and you can't fake a live chart. What we do in the live training room, we're training live in real time. And so your chart should match Michael's chart, tick for tick, okay? If it doesn't, something's wrong. Whoever's teaching you, whoever's mentoring you, if you're using live charts, as you should be in a teaching environment, if your chart doesn't match his chart, something. Now, because we use a range chart in the training room, sometimes they can get off by a tick or maybe 2, but that's only because they started crunching data at a different time. The longer the 2 machines run, the closer they'll get together. So, not pointing fingers at anybody, I'm just saying always be aware of that. Historical charts and historical videos can make anybody look like a genius, okay? I'm not a genius. I'm a humble guy with a microphone, a set of charts, and a pretty good understanding of the markets. And that's what we bring to the table. We bring tools and knowledge. What you have to bring is discipline, patience, and the willingness to learn to think in probabilities. To take terms like winner and loser out of your vocabulary and replace them with terms like profitable and unprofitable. You have to be able to wrap your brain around the fact that trades that get stopped out are simply a cost of doing business. It's like the guy who buys the Subway franchise, okay? Every time the manager calls back, hey boss, we need more salami and more Swiss. The manager, and some managers I'm sure do, go into their office, kick the wall, and scream, oh my God, how am I ever going to get ahead? Every time I turn around, we need more of this, more of that, more of this, more of that. Well, that's good. That means you've got a great business because you're using lots of salami and lots of Swiss. Stop outs, you can learn to look at them in the same way, okay? For so many trades that are profitable, so many trades are going to be unprofitable. The greatest trader in the universe, whoever he is, the guy who has the co-located server and all the big screens like Shepard Smith and a crowd of people running around with iPads yelling out, Vance decline line just jumped, the trick is up, the trend is down. I mean, everybody's got their own job, and he's standing in the middle of the floor calling out the shot to the person who's actually executing the trades. That guy, with all his toys and all his knowledge, he's only going to be profitable 7 out of 10 trades. That's as good as it gets. And so those of us who come into this business and try to become the 10 out of 10 trader or the 9 out of 10 trader, I mean, we literally spend years and tens of thousands of dollars trying to unlock the mystery of the universe that allows us to be consistently profitable 10 out of 10 times. Friend, I'm here to tell you, it's like hunting for a black cat in the dark that doesn't exist. It's never going to happen. You're never going to get there. And all that time that you burn up, you could be learning how to trade. And that's really where we hang our hat. And that's the thing that we feel is most important, is that you learn how to trade. So, as lucrative for us as the concierge trade alerts are, and from the results you can see how they can be lucrative for you as well, the 90-day mentoring program costs you less and creates a lot of extra work for us. So I should be pushing you towards the concierge. Less work for me, more money to put in the bank. But I really want to do what's in your best interest. Once I teach you how to trade, once you understand how the markets work, once you understand the herd mentality. I wrote or talked about this the other night. It's very difficult to decipher what a lone wolf is going to do given a specific set of circumstances in the market or even in real life. But a pack, the herd, when they are presented with a specific set of circumstances, be it in the market, be it in real life, you can get a pretty high probability idea of how they're going to react and what they're going to do. And once that pack turns and starts heading in the other direction, all we're looking to do is hitch a ride on their backs long enough to get to our daily goal, which is either 2 points a day in the S&P or 10 ticks in gold or 10 ticks in crude, whatever market you've decided that you want to trade. The beautiful thing about the S&P is you can trade it around the clock. Crude, pretty much the same. The euro, from 3 a.m. on, it's really good. And gold's pretty much good around the clock. Okay? So, I want to leave you with what I originally made this video about. I want you to think about it. What is your goal? What is it you really want to do? When I have someone in a interview type situation and I ask them that question, what is your goal? And they look at me like, well, I want to make some money. Oh, okay. Can you give me a little better answer? And they said, well, I want to make a lot of money. Okay. Is it possible that you can give me a little better answer than that? Which is about the time that they come unglued and go, look, dude, what is it you want from me? And I say, well, in order to succeed in life, we need to have definitive goals. So when you say you want to make money, or a lot of money, now to some people a lot of money is $1,000 a week. To other people a lot of money is $1,000 a day. To some people $5,000 is a lot of money a week. To other people $5,000 is a lot of money a day. So with that said, now tell me, what's your goal? And so then I start to hear some hard numbers, and they'll usually steal the ones I just gave them. Oh, if I could just make $1,000 a day, man. They do some quick calculations, and that comes up to about $250,000 a year before commissions, okay? Which, according to Barack Obama, makes you one of the wealthiest Americans. Is that realistic? Well, you tell me. This really is the S&P 500. This really is what it did today. But this is a 30-minute chart. And a lot of stuff can hide behind a 30-minute chart. What if I took this down to a 5-minute chart. That might be something more of you are familiar with. Okay, and let's put it on the ES if we can. Apparently we can't. ES. Okay. Okay. So again, the S&P, you can trade it pretty much around the clock. But for the majority of the world, 9:30 a.m. Eastern is when the quote-unquote market opens. Okay? So at the opening bell, the opening candle, the market opened today on Wall Street at a price of 23.45 on the S&P, 23.45. And then it put in a swing high at 23.49 and a quarter. So that's 4 1/4 points. Now from that high at 49, it went on to put in a low at 42.75. So let's round that up to 43. So that's 6 points. Okay. Now from this low at the close was 44 1/4. So let's call it 45. 45 to the close up here. No, that's not right. This candle opened at 43.50. It opened at 43.50. And it put in a high at 47. So that's 3 1/2 points. Okay. This candle opened at 46.50 and put in a low at 23.40. That's 6 1/2 points. We're now 3 hours into the market. I didn't keep a tally of all those numbers. If you want to back it up and go in slow-mo, you can do that. From this low at 23.40, the high is 43 1/4. From the high at 43 1/4, the low is 40 1/4. It's 3 points. And from this low at 38.50, we go up to 41.75. So the average swing in the S&P is 3 to 5 points. That's the average swing. Oh, that wasn't even today. Now I don't do that. I don't go back and cherry pick days. So let me scoot this thing up to today. Okay. Swing high 23.85. Swing low 83.75. So let's call that 23. No. The low was 83 1/4. So let's make it 23.84. That's not right. Something's wrong with my thinking. 83 1/4 to 85. Why doesn't that seem right? Let's try this. High's 85. The low's 83 1/4. So what is that, 1 3/4 points? Maybe I'm just tired. The low here is 81 1/4. The high here is 85. So that's 3.75. High here is 92, and the low here is 82. High 92, low 82. That's a 10-point move. Okay. Now those are the real numbers from today. The high here was 94 and a quarter, and the low was 87. That's about 7 points. From this low at 89 to this high is 93. From this low at 86, this high is 92. So that's almost 6 points. The high here, 94, 75, just call it 94. The low is 86. That's 8 points. It's an 8-point move, and it took 5, 10, 15, 20, 25. So I said all that to say this. Is it realistic? The high 86.75, just call it 86. The low is 82 and a quarter. So that's 4 points, almost 4. Now we're getting back to the London Open. London Open, for those of you that live on the West Coast, if you stay up till midnight, that's 3 Eastern, that's when the London opens. There's some really nice opportunities off the London Open. High 85.50, low 82.75. Now you've heard me say we never get out at the swing high or swing low. And the reason is we trail our stop. Okay? Plain and simple. We're going to always leave a little something on the table. And there's nothing wrong with that. Okay? So, back to my question. Is it realistic for an individual to be able to take 2 points out of the S&P on a daily basis? The answer is yes. In fact, probably the easiest part of building, no, there's nothing easy. The simplest part of building your trading business is extracting 2 points from the market. It's all the stuff that goes through your mind that clouds your vision, all that noise between your ears that makes getting those 2 points difficult. When you just saw that they're there. And the market, it doesn't know who you are. It will treat you just like Warren Buffett. The beautiful thing I like about futures is it's truly a level playing field because it's an electronic market. In equities, there are market makers, there's the middleman, and they can often make life tough, okay? But with futures, it's a FIFO market. First in, first out. So if I've got an order to buy 5 S&P 500 E-minis, and the guy behind me from Goldman Sachs is trying to buy 100 contracts, guess who gets filled first? I do, if I'm in front of him. In stocks, well, it's a little bit different story. So that's just one of the reasons that I like futures. Now, unlike options, where you've heard 85% of all options orders, options contracts expire worthless, that is true. That's factual, okay? Just like the statistic you hear in Futures Magazine and every other respectable publication, 90% of those who learn how to trade don't succeed. Sorry to say that outside of the CFRN ecosystem, that's a fact. Now, why is it different here? Are we smarter? Do we have some secret or some trick that the other guys don't have? No. We get up early, we stay up late, we work really hard, and every student that comes through our doors gets one-on-one attention, one-on-one personal mentoring. When you sign on, we are making an agreement with you that we're going to invest 90 days of our life in you. Now, you're going to be required to do a lot of stuff if you enter the mentoring program. Write a business plan, write a trading plan, make sure you understand the 24/20 blueprint, learn how to think in probabilities, become disciplined, learn how to trade by the rules, don't slip your stop. I mean, it's not easy money, okay? But it can be good money, and it does create the freedom to work from anywhere in the world that has a fast, stable internet connection. I know that sounds like a fantasy, but it's a reality. A fast, stable internet connection and the proper education. So think about this, and then think about what's getting in the way of you and that goal. And then call me, okay? Email me, or take this trial. Right here. Now, that's for the 90-day mentoring program. If you actually want to take the concierge trade alert trial, that includes access to the trading room, but that one's going to cost you $1. $1 US. It's going to probably be a little awkward to try to copy that off the screen. So what you can do, oh boy, just go to emini.cfrn.net and you can just click it, okay? And then you'll get a bevy of emails and just follow all the instructions. And that's it, friends. Love you. Hope I see you in the live training room tomorrow. If I don't see you there, I hope I see you on the radio. All right? Take care. Bye-bye now.
According to the IRS, the #1 crime in America today is identity theft. True story. Do you know 3 people who have not had their identity stolen? Guess what? The statistics say that 1 in 4 Americans will fall victim to some form of identity theft. Now, go congratulate your 3 friends who got off easy. Am I telling you this just to make you paranoid? Kick the covers all night? Hardly. I bring good tidings, because you know me, you can beat the odds. If I fail you, I have a $5 million guarantee in place to put your life back together. Yes, it does feel a bit like a superpower, but I refuse to wear the tights. Seriously though, identity theft is no laughing matter. Let me protect you before it happens. cfrn.net/legal shield. You can thank me later. Your peace of mind is waiting at cfrm.net/legal shield.